Hello, everyone, and welcome to TBR's webcast, Trends in Government IT Spending in 2011, TBR's Public Sector IT Services Benchmark Overview. My name is Allison Crawford, Marketing Manager here at Technology Business Research, and I will be your host for today's session. As many of you know, TBR provides unique, company-centric analysis on a consistent, timely basis, and the information we'll be covering today comes directly from our Public Sector Benchmark Report. This next iteration of the report will publish again this April and covers revenues, margins, and growth drivers. Moreover, not only do 5 of the top 10 vendors in the government space buy the report, one of these vendors has told us that they use this report in their internal Black Hat strategy sessions to help guide their go-to-market strategy in the government space. We're looking forward to this presentation and your questions and showing you ways that our research can help your business. But before I hand this over to John, I'd like to review a few housekeeping items to help you get the most out of today's session. First, we will be recording the session and posting it to the TBR YouTube channel if you'd like to watch the presentation again or pass it along to your colleagues. Second, as I mentioned, this is an interactive session, so we encourage you to ask us any questions that arise during the webcast. I will be collecting your questions throughout the session and posting them to John at the end of the presentation. Third, we will send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the presentation. Now, let me introduce John Costas, Senior Analyst and Government Practice Lead in the Professional Services Practice. John has been studying the government market for the last 5 years and has such a deep understanding of the market, he should be classified as a GS-15. So let's get started. John?
Thank you, Allison, and thank you all for joining us today. It's no secret that the conditions, the environment in the federal IT services space during 2011 was extremely challenging. In fact, 12 of the 20 companies that we follow in the TBR Public Sector IT Services Benchmark saw their revenues decline in 2011. On the flip side of that, 8 of the 20 did realize a revenue increase during the year as well. So while some companies did suffer, some companies continued to generate revenue growth and in many cases improve their margin performance as well. As Allison mentioned, I'm John Costas, a Senior Analyst and the Manager of the Public Sector Practice here at TBR. I've been with TBR for 10 years and I've been following the IT services market in the federal space and the public sector globally for the last 5 years. Today's discussion will focus on the state of the market in the federal IT services space. What were the headwinds to growth? How vendors reacted to the conditions in the market? What were some of the actions that they took to preserve revenue growth, to avert a more steep revenue decline, and or to preserve their margin performance? And then finally, what is the outlook for 2012? So after today's discussion, you'll have a much clearer understanding of how the vendors that we at TBR and our public sector practice follow, how these vendors coped with the challenges of 2011 and are preparing for 2012. So certainly the most common reason cited for the headwinds to growth in 2011 was the turmoil in the federal budget process. The series of continuing resolutions had an impact on spending cycles, extending acquisition cycles, delaying spending decisions. In many cases, projects were canceled outright. Hindsight is 2020. We're in 2012 now. We can look back to 2011, and we've seen that the total amount of federal IT spend was actually slightly less than the funding levels that were originally authorized. And then towards the end of 2011, or I should say the second half of 2011, we began to see how companies were citing the cuts in not only defense, but the drawdown of operations in the Iraq and Afghanistan theaters as beginning to have a negative impact on their top-line performance, as well as their outlook for 2012. We've seen the pullback in federal IT spending really taking hold of the market beginning in late 2010 and then certainly extending through 2011, as you can see in the graphic in page 5. The average revenue growth for the 20 firms in the TBR public sector IT services benchmark through 2011 was just under 1%, falling from just over 18% in 2010. Now, one caveat with respect to the 2010 growth figures, that particular figure that I cited included the impact of two major acquisitions, the acquisition of EDS by HP and the acquisition of ACS by Xerox Services. The impact of those acquisitions from a revenue standpoint came off the books for both companies late in 2010, and as a result, we saw the growth rate for the average growth rate for the 20 firms, which is illustrated here. We saw that normalize during the course and decelerate during the course of 2011. We have based on the work that we've done thus far this quarter, we have a sense of, for most of the companies that we've talked to, that the pattern that you're seeing illustrated on page 5 here will continue. Most companies do expect to see growth either below the zero line or marginally above that, but in most cases the outlook is for negative growth. So how did the vendors respond to the conditions in the market? We saw a focus on improving the overall business development process. We saw internal investments such as companies investing in new CRM systems. Externally, we saw companies drawing closer to their customers, putting more executive and senior management in front of their clients to better anticipate client needs and spending trends. We saw an increase in the number of proposals submitted. This certainly ties in with increased business development activity. We saw the proposals focusing on reducing customer costs for their federal IT customers, expediting timelines and improving efficiencies. We also saw companies looking at their subcontractor relationships more closely, as well as their collaboration with other vendors, so that they would bring the right team to the table the first time and best understand customer needs the first time, rather than having to go back and revisit those issues later on. With respect to company portfolios, we saw an increase in focus in several areas: cybersecurity, C4ISR, intelligence, as well as IT modernization, data center consolidation. We saw more momentum building in the cloud computing space, especially with respect to the early discussions around mapping the migration roadmap for clients. And logistics was another area where we saw companies realigning their service portfolios to follow the spending trends within the federal space. So along with portfolio reshaping was a focus on expanding into adjacent and parallel markets, not only domestically but also overseas, in order to diversify revenue bases away from the challenges in the federal space. Domestically, we saw an increase in focus on the health IT space, public safety, the energy sector, and we also saw companies leveraging, for example, their cybersecurity expertise to uncover opportunities even in the commercial side, not only in the U.S. but also overseas. In international markets, we saw an overall increase in the showcasing of solutions, companies looking to cross-sell more of their portfolio, more of their IT services portfolio to existing military customers. We also saw an increase in focus on areas like border security, as well as cybersecurity, C4ISR internationally. However, one of the challenges that many companies cited was that when entering into overseas markets, the timing of new awards was becoming increasingly difficult to predict, especially in Europe with respect to the sovereign debt crisis and how that was impacting government spending. With respect to merger and acquisition activity, we saw companies looking to leverage acquisitions also to reshape their portfolios, move into or expand into new markets or adjacent markets, and especially in areas where they expected that funding priorities would remain focused. And then finally, I mentioned earlier the increased focus on partnerships and alliances. We saw companies, especially in areas such as cloud, looking to expand their partnerships. This was in particular the case with respect to the government-centric companies looking, in some cases, to strengthen their partnerships with their commercially centric counterparts, as the momentum builds in the cloud space. And finally, with respect to vendor actions taken to cope with the environment in 2011, many vendors conceded that their top line was going to contract, and therefore what they were left with was focusing on sustaining their margin performance or avoiding significant decline in their margin performance. Companies undertook actions to reduce operational drag by consolidating facilities, reducing operational redundancies, consolidating IT infrastructure. We saw the implementation of efforts to streamline supply chains, improve existing supply chain management or ERP systems. One example of this was a supply chain initiative on the part of Raytheon, which was a company-wide initiative, not something that was limited to their IT services business. Another area where we saw an increase in focus was on improving overall contract delivery and contract performance. Many companies cited how there were an increasing number of penalties being built into the contracts that they were signing with their federal clients. They were having to undertake more of the risk, that federal clients were less tolerant of contract underperformance, and that this was having an impact on their margins if they were to underperform. And then finally, we saw companies minimizing their exposure to unprofitable activities, and this was reflected in divestitures of certain business lines that were either not profitable or not up to a certain level of profitability. The de-emphasis of certain contract areas, especially in the state and local space, and once again the shifting of portfolios out of less lucrative to more stable and more lucrative areas. On page 9, we've provided for you a snapshot of the scoring performance for the 20 firms that we cover in our public sector benchmark study. Without getting into the details, because the underlying methodology is quite complex, these scores reflect the individual company performance across 19 metrics that we collect and analyze. And this is for the third calendar quarter of 2011. The top performers in that quarter were IBM Global Services and Harris IT, mostly due to their performance with respect to areas like growth, organic growth, as well as resource management. So the outlook for 2012, especially based on the conversations that we've had over the last several weeks as companies have reported their fourth quarter and their year-end earnings, the outlook is, on the most part, rather negative. The federal government has requested about $81 billion for its IT services budget in 2012, which is up just under 3% from the 2011 level. We believe that a little more than half of this will be on the federal civilian side, where most of the growth will occur as well, while the defense side will see 0 to marginal growth. And one thing to note here as well, we've got the sense that not all departments, in fact, only a handful of departments and agencies in the federal level plan to see an increase in their IT services budgets. Many, in fact, the majority are looking at steep cuts, especially with the likelihood of sequestration. So where will the spending be focused? Well, TBR in 2012, TBR expects that federal IT buyers will be prioritizing IT solutions both on the hardware and software side that streamline and simplify operations, things such as cloud-based software as a service for email and collaboration tools, as well as the consolidation of existing systems and data centers. We do also believe that overall spending on new IT infrastructure on the hardware and software side will be somewhat limited, but there will be an amenability to spending on new application development or the re-engineering of internal processes, to accommodate the aforementioned drive to streamline IT and organizational operations. We also see a growing interest in areas such as social media, mobility, analytics, logistics, in order to gain operational insight and improve efficiencies. And we've begun to see more momentum, as I mentioned earlier, in the cloud space, where many IT decision makers have expressed interest in having the initial conversations around developing the migration roadmap over to cloud. And finally, while some clarity has emerged about the 2012 defense budget, there's almost many vendors have expressed that there's almost a perfect storm of uncertainty that's taken hold of 2012, not only because of the uncertainty in the budget environment, but also the possibility of additional continuing resolutions, sequestration, and the upcoming election. So in conclusion, we've seen with the data from TBR's public sector benchmark report that the conditions in the federal IT space have been challenging. However, the results, while the majority of firms have reported difficulties and challenges, there were still a handful of companies that did manage to succeed during the year. However, the overall outlook for 2012 still remains rather muted and pessimistic. So at this point, I'd be happy to take your questions.
Great, thanks, John. So we had a few questions come in. I want to encourage anyone out there that has any questions based on the information that John has just gone over to send them in now. The first question I have is kind of a three-part question. What were specific cost-cutting activities that agencies were taking over the last 12 months?
Agencies or companies?
I'm sorry, companies.
Okay. Well, I can cite a couple of examples. Booz Allen Hamilton, for example, focused on reduced its expense structure by focusing on cutting incentive and stock-based compensation costs, lower amortization of its intangibles. Another example is CACI, focused on reducing subcontractor usage. We're also aware of programs at Raytheon and General Dynamics to internal review programs with respect to improving product and service delivery. There were headcount rationalizations, certainly actually earlier in 2012, we saw this happen in Booz Allen Hamilton, but in 2011, Lockheed Martin conducted a series of voluntary layoffs and facilities consolidations. And overall, though, one of the biggest levers that we saw pulled to cut costs was facilities consolidation. as well as reducing on the business development side, reducing bid and proposal expenses.
Excellent. And then the second part was what specific investments were being made to expand the portfolio?
Primarily, this was done in terms of acquisitions. We saw acquisitions focused on the cybersecurity space. We saw acquisitions, I think the biggest one of the year was General Dynamics acquisition of Vangent to move into the health IT space. We saw acquisitions as well to expand in the IT modernization space. But the primary focus of acquisitions really seemed to be in the cybersecurity and information assurance space.
Okay, and then we had a question on your slide 9. Was there a specific meaning to the colors where companies were split by, was it red, yellow, red, blue, and green?
Mm-hmm. Yes. That's our quote-unquote heat map, where companies whose score is above the peer average will receive the green coloration, or the darker green. The lighter green coloration means that their score fell within a certain range around the peer average, and then if their score was significantly below the peer average, they received a red.
Okay, great. And our final question is, you mentioned divestitures earlier in the presentation. What divestitures are being made in response to market conditions?
I think that the biggest divestiture during, at least announced during the year, which will conclude actually this year, was L3 Communications reorganizing its government services business line, carving out the systems engineering and technical assistance group, which will go forward as a publicly traded company known as Agility, while L3 retains the cyber intelligence and security businesses within what will be called, known as going forward, the National Security Solutions business. Not related to IT services, but I think it was also reflective of the market, was Northrop Grumman spinning off its shipbuilding business at the beginning, or at the end of 2010, at the beginning of 2011, to focus more on the core areas of their business, like cybersecurity, unmanned systems, and C4ISR. And then another note that I'll make with respect to divestitures, though this just occurred last month, we thought that it was very interesting that Harris Corporation announced that it was going to discontinue its cyber integrated solutions operation and divest its data center facility in Virginia, citing that it was basically in response to the cloud uptake, which appears to be biased more on towards private cloud solutions rather than public cloud solutions.
Excellent. Thanks, John. So that concludes the question and answer portion, unless anyone else has a last-minute question they want to sneak in under the wire. We've posted John's contact information. I would encourage you to follow him on Twitter to get additional information on the research that John is working on and to get insights as they come up in his day-to-day research. I've also put his email address as well as our VP of Sales email address in case there's interest for you to follow up and get access to the report. And thank you for your time and look forward to working with you guys soon. Thanks.